Thailand's central bank decided today to keep interest rates unchanged at 2.75% due to an increase in inflationary pressures and faster than expected economic growth. To discuss the reasons for the country's strength, I'm joined down the line by Shayne Heffernan, founding investor at Heffernan Capital Management. Shayne, a pleasure to have you on the show. Now, Thailand's economic growth exceeded expectations in the last 3 months of 2012. Has the country now recovered from last year's devastating floods?
The floods were definitely devastating, but we have seen a shift in manufacturing now from that region, that flood-prone region, to the eastern seaboard of Thailand, the area from Bangkok to Rayong. So I think, one, we have recovered from the floods, and two, should such floods occur again, they'll be far less devastating in terms of manufacturing.
Gross domestic products surged 18.9% in the October to December period. Why has growth so exceeded expectations?
Growth for that particular quarter was very much dependent on two government schemes. One was the tax rebate for new motor cars, and the second one was the rice subsidy. They did drive the economy, but they did drive the economy at a time when it needed to be driven. So I do think that number, while accurate, is not a number that will reflect growth in Q1 2014. But the economy is still a very strong economy and is definitely growing.
Is the large growth the reason behind the central bank's decision to leave rates unchanged today?
They did meet today, and I think the result was a 6-4 vote not to change the interest rate. I do think that's a wise decision. What the Bank of Thailand has done is it has relaxed the rules on Thai companies expatriating money to make acquisitions overseas. As we've seen with Thai Bev in Singapore, they bought Fraser Mead. We've seen PTT make a huge acquisition in Africa. We've seen Banpu make acquisitions around the region as well. So that, to some extent, alleviates the problem. The interest rate, the change in the interest rate will not have a significant effect. And certainly changing the interest rate, given the inflationary factors that already exist in Thailand, would probably not be the best move. So I don't expect to see the Bank of Thailand to act until we have an exchange rate of 28.50 to the US dollar. At that point, I think we will see them intervene.
And what about consumer prices? Do they remain a concern for the central bank?
It is a concern for the central bank, and it's one of the reasons they're so reluctant to lower the interest rate. We do have significant inflationary pressure in Thailand, and that is partly because of the government subsidies, partly because of the increased minimum wage that we had in Thailand, a progressive step, 300 baht a day, that's now in effect in most of the country. That has certainly added to prices in the region.
Lastly, more than 22 million tourists visited Thailand last year, up nearly 16% year on year. Why is tourism so popular in Thailand, and how does this help to boost the economy?
I don't think Thailand is particularly reliant on the tourists coming in. It has created a strong growth, certainly in the hotel sector. We've seen some very successful airlines launch in Thailand, but I don't think the economy is particularly dependent on that. But Thailand is an amazing place with some amazing scenery. But the big thing Thailand has is the experience of being in Thailand. It is a wonderful place to visit, whether you're visiting from the bottom end to the very top end of the socio-economic scale. The Thais are particularly welcoming. And it's a great experience always to come to Thailand.
Thank you to Shayne Heffernan there for his excellent insights into Thailand's growth. Keep clicked to Dukas Copy TV for more updates throughout the day. Take care.